What if I told you that $1,000 investment today could either become one of the smartest financial decisions you ever make or one of the biggest mistakes? That sounds crazy, right? But that's exactly why investors are paying attention to Veritone stock right now. Most people have never heard of Veritone. It isn't a giant like Nvidia, Microsoft, or Palantir. Yet some investors believe this small AI company could have massive upside if artificial intelligence continues growing over the next decade. So here's the big question. If you invest $1,000 into Veritone today, what could actually happen? Could it double? Could it triple? Could it become 10,000? Or could you lose a large part of your investment? Before answering that question, we need to understand what Veritone actually does. Veritone is an artificial intelligence company that provides AI-powered solutions for businesses, media companies, enterprises, and government agencies. Its main platform is called VERI. The idea is simple. Instead of companies building AI systems from scratch, they can use Veritone's platform to automate tasks and access different AI technologies from one place. On paper, this sounds extremely attractive. After all, AI is one of the fastest growing industries in the world. But here's something many beginner investors forget. A great industry doesn't automatically create a great investment. Execution matters. Revenue growth matters. Profitability matters. And competition matters. That's where the story starts getting interesting. Veritone operates in a rapidly expanding market, but it also faces competition from larger companies with much bigger budgets and resources. And that creates both opportunity and risk. The kind of risk that could make or break your investment. Now let's imagine you invest $1,000 into Veritone today. What happens next depends on which future scenario becomes reality. Let's start with the bad scenario first. Because smart investors think about risk before reward. What if Veritone struggles to grow? What if AI competition becomes even more intense? What if investors lose interest in smaller AI companies? What if revenue growth disappoints expectations? These are all very real possibilities. In a bearish scenario, the stock could fall significantly. A 50% decline would reduce a $1,000 investment to around $500. A 70% decline would leave you with only about $300, not exactly the outcome investors dream about. And this is why investing in small-cap growth stocks requires patience and discipline. Most AI companies won't become the next Nvidia. That's just reality. Now let's move to a more optimistic scenario. Suppose Veritone continues growing. The company attracts new customers. AI adoption accelerates. Revenue improves. Investor confidence returns. In that situation, the stock could potentially double or even triple over the next several years. A 2x return turns $1,000 into $2,000. A 3x return turns $1,000 into $3,000. Not life-changing money, but still an excellent return compared to many traditional investments. And honestly, this is probably the scenario many investors are hoping for. Steady business growth, improving financial performance, and gradually increasing market attention. But what if the story becomes much bigger than that? What if Veritone becomes one of the surprise winners of the AI revolution? That's where things start getting really exciting. Now let's talk about the dream scenario. The scenario that attracts speculative investors. What if Veritone executes almost perfectly? What if artificial intelligence adoption grows faster than expected? What if the company lands major contracts? What if Wall Street suddenly begins paying attention to this small AI stock? This is where the numbers start becoming exciting. A 5x return would turn $1,000 into $5,000. A 10x return would turn $1,000 into $10,000. And that's exactly why investors search for small-cap AI stocks before they become mainstream. But here's the twist, and this is something many people completely overlook. The biggest risk may not be bad technology. The biggest risk may be being ignored. A company can have excellent technology, excellent products, excellent leadership, and still fail to produce strong stock returns. Why? Because stock prices don't move based on technology alone. They move based on growth, profits, execution, and investor confidence. That's the hidden danger many beginners never think about. Now let me give you my personal opinion. I think Veritone is an interesting speculative AI stock. The company operates in an industry with enormous long-term potential. Artificial intelligence is likely to remain one of the biggest investment themes of this decade. However, I also consider Veritone a high-risk investment. This is not the type of stock I would build an entire portfolio around. If I invested in Veritone, I would treat it as a speculative position with meaningful upside potential and meaningful downside risk. In simple terms, it could outperform dramatically. but it could also disappoint investors. That's the reality. So what happens if you invest $1,000 in Veritone today? The truth is nobody knows. Your investment could become $500. It could become $2,000. It could become $5,000, or maybe even $10,000 or more if everything goes right. That's what makes small cap AI stocks both exciting and dangerous. Now I want to hear from you. If someone gave you $1,000 today, would you invest it in Veritone? Or would you choose another AI stock instead? And if you could hold only one AI stock until 2030, which company would you pick? Let me know in the comments below. If you enjoyed this video, don't forget to like, subscribe, and turn on notifications for more stock market and AI investing content. Thanks for watching, and I'll see you in the next video.